Welcome back, everyone. Today, I'm going to be doing another oil tanker update, and I'm going to be telling you why I'm optimistic about the future of the oil tanker market and why, if you haven't already, you might want to snag some shares in one of these oil tanker stocks. Of course, please do your own research, do your own due diligence before you buy and sell securities. But of course, this is just my opinion, and I own oil tankers, so I'm exposed to this market through NAT, which is one company. Okay, so I believe that oil tankers actually have a pretty optimistic perspective from 2021 onwards, and I'll explain exactly why. And this mainly has to do with the idea of vaccine use and the tanker market rates in the future. Okay, so let's just go over briefly weekly recap of the oil tanker market. So NAT was actually up by 2% this week. Monthly, it's actually up by 11%, which I see as a very, very good sign. Frontline was the only stock that was down this week, and we can see that it crashed on November 25th because the report came out of their Q3 results, and they actually missed analyst expectations, but they still reported a nice quarterly profit, right? So, I don't think that this significant decrease by almost 11% was actually warranted, okay? And we're going to go over quickly their earnings. And finally, EURN was also up by 0.75% on the week, okay? So again, not much really happened this week, but I do think some things are brewing that promotes my optimism with tanker stocks and why I think they will be doing well, okay? So let's quickly go over Frontline earnings. So of course, analysts expected 32 cents per share, as we can see on the right here. However, they actually pulled in 29 cents per share of profit, okay? And this resulted in the company, of course, sinking by 10%. And I think this actually might be a time to buy up some shares of Frontline. I personally am not doing so just because I invest a significant portion of my portfolio into oil tanker stocks. So I don't want to expose myself even more. But I do think that if I wasn't invested in oil tanker stocks, now could be a good chance to invest in Frontline. The only thing that's concerning that's reported in this article is their debt, okay? So first they say, of course, Frontline was expected to earn 32 cents per share, but they came in at 29 cents, okay? Which was about a 10% revenue miss, right? And this is actually not too bad. However, they have a significant amount of debt, okay? 1.9 billion of debt, which is barely 1/10 of the amount that they have in cash, okay? So they're saying, okay, maybe Frontline should pay some of their debt back. But the reason why they have such a high debt is, well, one, oil tankers generally have high debts, but two is because they have a very juicy dividend of like 30%, okay, which is ridiculous, even in terms of oil tanker stocks. Oil tanker stocks are known to have very high dividends, but, not this high of like 30%. And that, could represent a couple of things. One, again, a ridiculously high dividend, but also two, a very low share price, right? It's only $6, right? Where usually these tankers, Frontline has been trading at, around like $15 to $20 earlier in the year, okay? And also it has a really low P ratio, which means that it has pretty damn good earnings for the value that you're getting, right? So what you're paying for the company is actually significantly cheap if you compare it to what their earnings actually are, okay? And because the markets are forward-looking, they're definitely expecting some pretty terrible Q4 results. But I do think that onwards, it's a pretty good and optimistic play, okay? So we talked about that. And of course, here we can see a depiction of that, Q3 was definitely still there in the positive, but we can see compared to Q2, where Frontline earned $1.04 per share, they're barely earning a third of that in Q3, okay? So they're still in the positive, but still, compared to Q2, it's kind of a joke, right? However, again, I'm optimistic, okay? And they're still earning money, right? So which is a good sign. And I don't think that 10% drop was warranted, okay? And let's move on to NAT, of course, the company that I own. We know that it announced a 4-cent per share dividend payable on December 15th, as long as you're a shareholder on December 2nd. Okay, so all that means is that their dividend dropped significantly from second quarter, where it was 20 cents per share, now down to 4 cents per share. Still, at least, they're focused on paying their dividend. And of course, they announced their 93rd consecutive dividend. So they're very, very loyal to paying out their dividend, even if it means that they're losing money. Okay, so they lost $10 million this quarter, and they're still paying out a dividend, right? That just speaks to, in general, the oil tanker market likes to pay back its shareholders in forms of dividends, okay? And here we have weekly tanker updates, which goes over the broad spot rates in the tanker market and exactly where the order book is, right, for new buildings and also scrapping these tankers, okay? So this was produced yesterday on the 27th of November. As we can see here, this is the oil tanker market from this year. We can see that the rates are significantly lower than levels in 2019 and 2018. And of course, this is because of new imposed restrictions and lockdowns across the world, which is depressing oil shipping and the oil market in general, right? Reduced demand for oil means that there's less oil to transport and store around, okay? Especially since oil wells have already significantly cut their productions because of the first wave of the pandemic. Anyways, so we can see that rates are seemingly lower even compared to, of course, April. And this is why, so many companies were just like producing money like hand over fist, just like absolutely ridiculous. They were just like a money printer, just like the Fed was printing out money for the stimulus checks, just going, I don't know if you've seen that meme, but anyways, we can see that for crude carriers, VLCC carries 2 million barrels of oil, Suezmax carries 1 million, and Aframax half of that. We can see that spot rates were actually up this week. From VLCC was up from 7.9 to $10.2 thousand. Suezmax was a gain of $1,200 from $6.1 to $7.3 thousand, and same thing with Aframax, a gain of over $3,000. Okay, so this is a good sign. Of course, this is just for this past week compared to last week. We'll see how it does in the future, but I am optimistic. Okay, and stick around for news on why I'm optimistic. Okay, we can see that the weekly results from crude carriers. Of course, we can see a little bit of an uptick in terms of the time charter rates for these crude carriers, which is a good sign again. For the clean carriers, it's pretty much either stagnant or a little bit of a downtrend. But most of the companies, like for example, NAT specifically focuses on the Suezmax market, which is a crude carrier, okay? And for the time chartered results, overall, we can see the indexed line is in yellow. We can see, of course, that there's a slight uptick towards the end of November, which is, again, a good sign. Okay, and we can see right now that currently 7.1 of the tanker fleet is used for floating storage. So, and most of this is in the form of VLCC carriers, of course, just because they can carry the most amount of oil. It makes more, from a cost perspective basis, it makes more sense for these large oil companies to store their oil on, a VLCC carrier, which stores the most oil, so they can get the most benefit out of their VLCC carrier, okay? And finally, we're just going to go through this. We're going to look at tanker deliveries, and we can see that tanker deliveries are at their lowest point ever. And within the past 5 years, we can actually see that tanker deliveries are at their lowest point since probably 2015, 2014. We can see here, this is 2020 right here, represent the deliveries of tankers. And we can see levels have not been this low for literally 6 or 7 years, right? So this just means that not many companies are ordering tankers just because the situation is so unpredictable, okay? And actually, we can see that tanker rates for recycling, sold for recycling, are also necessarily at their lowest point. So, these companies are kind of just holding onto their tankers, hoping for higher rates in the near-term future, okay? And again, we can see maybe, again, the same type of trend in 2016, 2015, okay? And finally, new orders of tankers are at their lowest rates compared to the past 5 years. So in 2020, so far, 168 compared to 202 in 2019, 222 in 2018, and 283 in 2017, right? So what this means is that the tanker order book is depressed, okay? And what this means, of course, that when there's fewer tankers on the markets, the few tankers that are on the markets can actually jack up the spot rates because, of course, these oil tankers operate on the basis of supply and demand. So when there's fewer tankers, then these oil tanker companies can actually charge more for delivering and transporting their oil, okay? This just shows you the position. So, of course, if you go to NAT's page, you can click down. They have the weekly tanker update. So I just find this interesting, okay? And this is part of my bull thesis for tanker stocks, okay? The first main reason is, of course, that there's the lowest order book of tankers in the past 5 years. So what that means is there's going to be a decreased amount of tankers in the market, which will push spot rates up. Okay, the second one is that specifically my company, NAT, actually announced financing for 2 new buildings of Suezmaxes, which of course we can see here will be delivered for the first half of 2022. So, they're forward looking, right? And this sums it up perfectly, okay? NAT views the rate collapse as a short-term phenomenon after ordering 2 more tankers, right? So why would they order 2 more tankers if they don't expect, of course, that the spot rates and their profitability to go through the roof at least some point in the future, okay? So they're betting on a quick recovery, and at least a recovery on the 2021, 2022-ish, when they're receiving these new oil tankers, okay? The second part of it is, of course, the timing of vaccines, right? So right now, we know that a couple of vaccines are pretty much almost approved by the FDA, and soon the first couple of vaccines are starting to roll out. So this is just one scenario. And by the way, I took this from Morning Brew. It gives you like a timeline of what's going on in the markets, all right? So here they're saying, here's a rough timeline beginning to take shape. And here's the best of the scenarios, okay? So we're saying the first vaccine rounds go on December 12th. By January, the end of January, about 50 million Americans could be vaccinated. And finally, February, March at 30-40% immunity, which is very close to herd immunity, where basically the infection rates will pretty much stop, okay? So what this means is that by February, March, we could see a significant return to normal activity, right? Demand for oil will increase, demand for oil transportation will increase, and we could see a spike in, of course, the spot rates. And that's what, of course, that I'm betting on. And so because of these 2 reasons, I'm still holding on to my NAT shares. I think that they'll be profitable in the future, one, because of the lower order book and lower deliveries of tankers. So I think this will push spot rates up, as well as the push for the vaccine. And when life will return to normal, this will also increase demand. Okay, so again, thank you so much for staying with it. I hope you have a fantastic day. Let me know what you're doing with your oil tankers, if you own any stocks now, or if you're going to buy in the near future. Anyways, thank you and take care.